Crypto Hotep here with another trading video. Hey guys, thank you guys for tuning in. As always, this is another crypto market update. I believe the last one we did was last month in April. So we're doing another one this in the month of May. And we are just basically, these videos are just to go over my thoughts on the market, where I think the market is going, and then also to review the holdings that I have in our spot altcoin trading portfolio. None of this is financial advice at all. Please do your own due diligence with investing and trading cryptos. Big shout outs to Coinbase as always, because they sponsor these videos. And if you don't have a Coinbase account, please use the link in the description below. Even if you do have a Coinbase account, still use that link in the description, and you can tie the account so that whenever you trade on Coinbase, they will pay me a portion of those fees, of those transaction fees that they charge you. So you don't have to do anything. You don't have to reach in your pocket or your wallet, but you could be supporting me, supporting the channel as well. With that being said, guys, so this past month, from April to May, it's been very volatile with a lot of conflict over Middle East. We've seen the U.S. economy kind of dip here strongly, just with a lot of sentiment in the markets, and a couple things that we have coming up in May and into June. We'll look at the calendar here, the economic calendar. So on Wednesday, May 20th of this year, we do have the FOMC minutes, or of this week, I should say, we have the FOMC minutes. So usually the FOMC minutes predict how the Fed is looking into the future on Fed rate cuts. I'm really not sure where we're going to go in terms of Fed rate cuts. There are some people on the fence saying no, they're not going to happen, and there's some that say we need to happen. The economy is just in a crazy, not so good shape here. We need to cut rates as quick as possible. I'm kind of in the middle. I'm not really sure where to go here, because there's a lot of good that can happen with cutting rates, but a lot of bad that can also happen as well. So in addition to that, you also do have a new Fed chair in Kevin Walsh that just got confirmed last week. So this is a high volatile event this week on Wednesday, May 20th. So keep this in mind, okay? If you have any positions, any holdings, any trades open, keep this in mind. This is going to have a direct reflection on your portfolio. Then Thursday, there's some things with the housing starts. I usually don't follow these, but they are high impact here. Thursday of next week, May 28th, we have GDP growth rate. This is going to be huge. This is going to be a very volatile event. So how did America's economy look, right? How did it grow? How did it grow quarter over quarter from Q1, I should say, excuse me. So the consensus is 2%. Will it have grown 2%? Again, we're in a weird spot in this economy where, consumer sentiment is bad, CPI is up, inflation is up, jobs are down currently, right? So we also have initial jobless claims that have increased. So I really don't know where to call this. If this goes down, if GDP growth for America goes down, that's very bearish news. You hate to see it. You don't want to see that. But in all honesty, that's kind of where we are in the economy right now. But we'll see. So, surprise numbers can come out. Personal income, I normally don't track this either. ISM manufacturing, this I should be tracking. I'll look into this a little bit more, but I typically don't. JOLTS job openings, those will be in early June. So this is good to see. So we usually want to see a big number on this. We don't know. We don't know what could come out here. ISM services, I normally don't look at this. And then non-farm payrolls, that's early June too. Non-farm payrolls, unemployment rate, these are two massive volatile events right here in early June that we will see. So just something to keep in mind here, guys. It's going to be a quiet end to May. Probably not really, especially with the Trump administration going over to China last week. I'm pretty sure this week they're going to tout that meeting that they had with China and the president of China as a very big event. A lot of wins for America, I could see, and we'll see how the markets play with that. But don't forget, we also have that Middle Eastern war that's going on with Iran. So, a lot of things going on in the geopolitical space here, I should say. Let's go to CoinMarketCap. CoinMarketCap. We will go to our, where is that at? We'll go to our market overview as we always do here. So with the crypto market space, we are back into the fear. We're back into the fear index on the fear and greed index. So the last time we looked at this, I believe we were in May, so it was around May 13th or so. So we were kind of a little bit past neutral. We were creeping up towards greed, and we had a little bit on greed here, and then we got quickly rejected here, and then a quick little dead cat bounce, and now we're back at fear. So we didn't get the parabolic shift upwards that we wanted to. That's okay, and we're back at fear. Not a big to do about that. Alt season, we are pushed back into Bitcoin season as of right now, according to this index. Will we see altcoin season? I still have faith that we do. So I still do have faith into that. Bitcoin dominance, and we'll show this on the charts, but Bitcoin dominance is at 60%. That's huge. So normally we want to see Bitcoin dominance below 60%, because that usually gives chance for the altcoins to breathe and run. Unfortunately, Bitcoin dominance is above 60%. Ethereum dominance is at 10%, and the others are at 29%, almost 30%. Okay, let's go to our crypto ETFs here. So crypto ETFs did see a negative net outflow. So we have a negative net flow here out, and that means that there was a lot of selling of crypto ETFs. I think Harvard University, who had a couple positions in IBIT, exited their positions or exited some of their positions in IBIT, and also exited their entire position of the ETH ETF. So we've had a lot of ETF outflows right now, as you can see, over 356 million on May 14th. Not a good showing right here. So on May 14th or May 13th, we had a little bit of an inflow of Bitcoin ETFs, but then boom, a big sell-off on the 12th of May, over 700 million ETFs right here, $700 million in Bitcoin and Ethereum ETFs, and then also negative over 350 million here on May 11th. So a lot of selling. We've seen it before, not a huge deal here. And that's kind of all I have to say about that one. We will look at our charts here. Let's go to our charts, and we're at the total 3 chart here, which is fine. So the total 3 market is altcoins. So total 3 market consists of all altcoins besides Bitcoin, ETH, and stablecoin. So it gives a pretty good representation of the market here that I think in relation to altcoins. So altcoins versus what I was speaking about last month, we have a strong base. So we have a strong bottoming right here, and we saw a good pump up here in May 4th in the week of May 11th. Here we have a small rejection. This blue line here is your 200-week moving average. So it looks like we've rejected here, right? So 200-week moving average rejected, which is common. That is expected to happen because we haven't touched this 200-week moving average in a very long time. So the first touches on this is going to be a strong rejection. It's completely fine. The big focus you should see is about 400 billion. We want to keep 400 billion here, and we would rather not see it come down here. So as long as we keep this strong support / demand level here, we should be good from an altcoin standpoint. Okay, let's look at the dollar. Let's go to the dollar here. So last time we spoke on the dollar was rejecting And since then, it did come down. But as a reminder, this is a strong support/demand area. And what happened? Well, it bounced. It touched, not that level. 1 second here. Let me just move this here. So it touched this support demand level, and distinctively, it moved back up. It popped up. This purple line, remember the blue line is 200 week moving average. Your purple line is your 50 week moving average right here. So you have your 200 and your 50 week moving average. Dollar price is coming in contact with resistance up top at 99.70, and then also your 50 week moving average. So I think we may get a rejection here to push this down. I would like for this rejection to come because, again, if the dollar's rejecting, that money from the dollar is going to get dispersed amongst volatile stocks, crypto, and metals alike. Okay, so I would like to see a rejection. I do not want this to push up. This is something I don't want. I don't want this to push up. I want this to push down and reject back into your 97.6 levels. Okay, let's go to USDC stablecoins, and I think I called this out in a tweet here. I said, watch. Actually, as a matter of fact, let's see if we can go to the tweet here. It's right here. Okay, so I think I was retweeting it. That's why it popped up here. So I said stablecoins are hitting the fib golden zone, and here's what I was talking about. This is where price was at that time. And I said, why does this matter? Expect a slight pop in stablecoin dominance here, which will translate in a downward move in altcoins and Bitcoin. Slight pullback in alts equals dead cat bounce in stables. Hopefully it doesn't last long. So let's go back to the chart. Okay, so USDC, stablecoin, and this is your fib golden zone between 50% and 61.8. We had a bounce, and guess what? Start of the week, green candle. Who says technical analysis doesn't work? Come on now. So as I mentioned before, this may be, and what I'm hoping it is a dead cat bounce. So in a dead cat bounce, what you would like to see is something like this. I want to see a little bounce, boop, up top, and hopefully reject this downward trend and then bring this down. We want the dollar, we want stable coins to be rejected downward. Your stable coins, as long as they're rejecting downward, that means your altcoins, Bitcoin, will more than likely run. Usually these are inverse. Stable coins are inverse with altcoins. So when one is down, the other is up, and vice versa. So we need stable coins to be down. Same thing with USDT. USDT is very similar here. So I got rejected at these key resistance and supply levels here. You see a downward trend. And then if I'm a betting man, let's take out our fib tool and we'll just put this here. Yep, 50, 61.8, bounce, boom, green candle. Makes sense. Yep. So again, hopefully this isn't a run back up. We don't want to see the stablecoins run back up here. We want to just see, we can give them a nice little pop and then downward trend. That's what we want to see. Okay. Another site for sore eyes here is the 10-year bond yield. I know I don't really talk about this much. I still chart it though. The 10-year bond yield is something to keep in mind here. If you're unfamiliar with the 10-year bond, so they have 10-year bonds. I believe it's 20, 30-year bonds. So it's a note that gives you a certain percentage that if you put money into it and wait that expected amount of time, you'll get that percentage back. So 10-year bond yield right now has interest rates of, it looks like, over 4.5% at 4.6%. This is ridiculous. Normally, you would like to see these rates come down. You would like to see these rates come down of government bonds, but as of right now, they are boosting. We had a break of a downtrend in December 2025. It was a fake breakout. And then again, we had a supply demand area here that was retested multiple times and it just shot up here. And the bond rate now for a 10-year is 4.6%, which is crazy. It hasn't been up this far since May of 2025, last year. What I'm hoping is this is just a fake breakout and you're trying to grab some liquidity, and hopefully by the end of the week you'll see this candle's body dip down. I'm not sure, but the reason why this is interesting is, again, the government bonds are a tool that some people use to put money in that is quote unquote safe. So if the bond rates are at a very high rate and somebody can get a guaranteed amount of money without having to risk it, then they're going to do that versus putting it into stocks, putting it into Bitcoin, putting it into very volatile assets. Okay, so you want to see this go down as well, and it's not, unfortunately. Okay, let's go to the ETH BTC chart. That's also represents altcoins. Not looking too well right now, unfortunately. So again, before in December, we had a break of the falling wedge here, and only for price to come back down. It did create a demand area here, a demand support zone right here at 0.028. Unfortunately, price is currently trading below that, but not fully. The whole body of the candle is not fully traded below this line. So this line in this support area is still active. So all coins are still alive, but they're kind of on life support right now. So this is kind of like the very end, because it's a very long way down here, right here. So with this area, right? So let's go to BTC dominance. So Bitcoin dominance, we talked about that when we spoke on CoinMarketCap. It's at 60%. It is at 60% right here, and it looks good, unfortunately. Unfortunately, we had an accumulation breakout up to the upside, right? So we had this accumulation, and it started back in November 2025. Then it somewhat broke down a little bit, but this was a fake breakdown, only for it to pop back up and break above the 50-week moving average right here. It did leave behind a new support and demand zone at 58%, but this doesn't look bad. I could see this coming back down here, and I'm going to take this off because I was not correct about that, but I could see this coming back down and maybe testing this 50-week moving average right here. I can see that. But unfortunately, it looks pretty bullish right now for Bitcoin dominance. Let's go to the king, Bitcoin itself. Everybody on Twitter is packing it up because it's over. Crypto's over again. But if you look at the chart, this is what the chart looks like. It looks like a nice double bottom right here. We've reclaimed the fib golden zone right here, and price is currently sitting in it still. So if I'm looking at this chart here, I expect two things to happen, and I said this last month. I said either we get a big pop-up back to 93,000 plus, or if we don't do that, what Bitcoin could do, and I tweeted this, is we could pop up past this golden zone, this fib golden zone, and then we could just consolidate in it, and then we would drive back to 93,000. So I think that's probably what's going to happen. We're going to get some cancerific price action here, where it's just going to be choppy in between 79 and 74,000, and then pop back up. That's what I'm thinking could happen. If we do not hold this fib golden zone and we drop back down below here, then expect lower prices. That's what I'm going to tell you with Bitcoin. So as of right now, I'm still bullish on Bitcoin. Still looks good. Still looks real good to me, and I still think we have a viable option to move back up past 93,000. Okay. Ethereum looks it looks like ETH BTC. So I will say this, something that is encouraging from last month. We did break above and reclaim 2,200. We did that right here on this candle here around the early the week of May 4th. However, we did close above this line, but the next candle after that was a red candle, a bearish doji candle that went back into this zone. And then currently, as you can see, we're trading below that, but again, the candle body is still inside this area and zone. So this area is still viable. For me, this means that the area is still viable and that the price is still of interest, if you will, right here. So again, all is not lost. This is still doable. I will just move this right here. Let me move it over just a little bit. So this area is still, or this move is still doable, I think, and I think it can happen. It's just going to be a lot of choppy price action again in this 2100, 2200 area for ETH. And then we'll go to our trades. The trades that we are in, I have sold nothing at all. But we did do a couple buys. So since we last spoke, I did a couple buys in early May on AERO. I added more on AERO right here on this candle. Why did I do that? Because it reclaimed this area, this support zone at 0.39 cents. It reclaimed it very nicely. So I bought some right there. And price came out of this manipulation type of move right here where price started trading below the support demand zone and then popped back up. So I did like that area. Now, we are pulling back into this area, which is completely fine because there is a rejection here at 56 cents, which is a pullback here. And I'm not really worried about that. So I did add to my AERO position. And I finally added to Graph. Graph is still my worst holding position in my crypto altcoin portfolio, but we did add some right here in the week of May 11th. Added some right here because this level at 0.025 has shown that, to me, it has established a line of demand / support here. So we did add some right here. Okay. Near, we didn't add anything besides what we did in March, and that was about it. We're still just waiting and holding on near. I'm hoping that we got a nice little break above this downtrend. Let me adjust this here. Let me put that in there. So we did get a nice little downtrend break here, and price is moving up, but as with anything in crypto right now, it's kind of stalled out. So if it comes back down, it's completely fine. We wouldn't buy any more. It's also an oversold status as well, so I would be expecting a little pullback too. C, you know what? We did add some C as well. So we added some C in early May. And the same reason why we added Graph, because this level showed a little bit of support and demand here, and I felt really good about this. Plus, we had 1, 2, 3, 4 green candles in succession. That's good enough in my book here. So, but as with anything right now, we're just pulling back. So we're pulling back here. But if you look at your slow stochastic up top here, we finally cracked out above this downward channel right here. We started this in October 2025, and it took all the way until May 2026 to get out of this oversold area right here. That is crazy amount of time, but we did it. Okay. So not saying it can't go back into it, but that's a good showing for the bulls here. And last but not least, Uniswap. Uniswap is still playing around in this demand area here. And we haven't added anything except in March, which we've already talked about. So, and they've been playing around in this area, which I said would happen, that they would just play around in these two zones between $3.32 and $4 here. And that's what's going on right now. So, just kind of watching it, not really doing anything. But as you can see, we're creeping up on the slow stochastic, just like everything else. So love to see that. It's just taking longer than normal. And let's check out the percentages on our altcoin portfolio. So the altcoin portfolio is in the green. On the 1 month, we have 1.51%. 3 month, we have 6.78%. And then 6 month, unfortunately, is negative 33.06%. USDC is still my largest holding as of right now. So USD or USDC, whatever you want to call it, is my largest holding. I am earning Bitcoin because I'm holding the USDC on Coinbase. So Coinbase has a pretty good program where if you hold the USDC on Coinbase, the brokerage, they'll provide 3.5% of Bitcoin rewards every single week for you. So I'm doing that and I'm earning Bitcoin. You'd love to see it. I would suggest doing that if you're not right now. Aerodrome is at negative 42%. NEAR is at negative 38%, Uniswap negative 49%, C negative 64%, and then Graph is actually at negative 60%. Graph used to be at negative 72%, but we did buy some Graph, which lowered our cost basis. So lowering our cost basis means that we're losing less money on Graph, thankfully. But again, guys, I'm showing you all this to say, hey, it takes time to create wealth, especially in crypto. And I don't mind holding these positions, even though they're down a lot. But again, at any time, crypto can just pop back up and say, hey, I'm here now. And then a couple, maybe 2-3 God candles in a row. Now all of these positions are in the green and they're in double digits. So, but guys, if these videos were helpful at all, feel free to like, subscribe, comment. Let me know what you think. And as always, thank you and happy trading.